Hey team, we're kicking off a new work week that's shaping up to be quite interesting for our market and could bring some serious volatility. The main reasons are the upcoming announcement from Strategy regarding whether they've sold more Bitcoin, as well as the inflation data in the US, which is about to be released. Other important topics we'll touch on today include the return of the whales, the growing expectations that the bear market might be coming to an end, and a realistic look at whether that's actually true. And to wrap things up, we'll take a look at CRO, which just dropped to a 3-year low. Please support the video with comments and likes so we can start the week strong, and if you're not subscribed yet, be kind enough to hit that button and ring the bell. Bitcoin has been holding above $65,000, and whether it continues upward more steadily or this awakening gets abruptly cut by a sharp drop depends on a few key factors. First, we need to watch what Strategy announces. The largest corporate holder of Bitcoin revealed a BTC sale last week for the third time this year, which injected additional panic into the market. Just a few hours ago, Michael Saylor posted on X making a new orange dot and writing "doing business." Some analysts believe this could hint at a Bitcoin purchase, while others noted that the same signal has appeared before a sale as well. It's also worth mentioning that a few weeks ago, CEO Phong Le stated that accumulation would resume once STRC stock reaches $100. Right now, one share trades around $95, so another sale seems more likely. By the time you watch or listen to this video, there will already be new information and volatility is definitely not off the table, so stay cautious. Beyond Saylor's decision, Bitcoin and altcoin performance will depend heavily on the economic events scheduled for this week. On Tuesday, we're expecting US existing home sales data. It's not the strongest market catalyst, but it often hints at consumer demand and overall economic activity. The market watches it, but no dramatic reaction is expected. Wednesday is the most important day, featuring two major events: the monthly OPEC report, which outlines how much oil member countries are producing, global demand forecasts, and price expectations. This report can move energy markets and, by extension, inflation expectations. Any changes in production or demand outlook immediately affect the macro environment. The other major event, likely the most important of the week, is the US CPI inflation report. We've talked about this many times. Lower than expected inflation increases the chances of rate cuts, which is bullish for crypto, while the opposite scenario brings joy to the bears. Thursday brings the PPI report, which tracks prices in the early stages of production: raw materials, intermediate goods, and finished products. It often acts as an early signal for future changes in consumer prices as companies pass higher production costs on to customers. On Friday, we have July retail sales, showing how strongly Americans have been spending lately, as well as the August Michigan Consumer Sentiment Index, another key indicator of consumer confidence. The slight stabilization in the crypto market coincides with increased interest from large investors. Recently, CryptoQuant revealed that Bitcoin whales have raised their holdings this year to over 3 million coins, with heavy accumulation happening when the price dropped below $60,000 in June. Big players have also increased their exposure to Ethereum and XRP. Ali Martinez reported that just last week, XRP whales added over 380 million tokens, worth nearly $400 million. This rising interest suggests they're preparing for the next major cycle. Whales rarely buy or sell based on feelings. They follow a clear strategy. Many in the crypto community even believe they have access to insider information that regular people don't. That's why smaller investors track their moves closely, and sometimes they get inspired to jump into the ecosystem as well. Fresh capital usually leads to price increases. Whales are stepping on the gas, and on top of that, many analysts have shared reasons that we may have already hit the bottom of the bear cycle. Martinez recently noted that Bitcoin's monthly TD sequential indicator flashed a buy signal, a rare event that successfully identified the end of the bear market in 2022. Bitcoin is also trading very close to its 50-month simple moving average. Since 2014, this long-term support level has repeatedly aligned with major market bottoms. Every time the price approached or touched this line, a strong upward cycle followed. Another important signal comes from the Chant Momentum Oscillator, which has reset to -71. The last time it reached this level was in June when Bitcoin dropped toward $57,000. Historically, such extreme readings often coincide with major bottoms and strong upward reversals. Moving on to Michael van de Poel's view, he believes Bitcoin has been consolidating recently and expects a strong upward move soon. The first zone to break appears to be $67,000, which could trigger a broader altcoin awakening. Analyst Merlin the Trader also weighed in, saying he thinks the bottom is already in based on Bitcoin's historical performance and expects a strong rally in the final quarter of the year. These are just three of the more respected analysts on X, and their opinions align with many other traders and commentators. So, does that mean Bitcoin won't drop anymore and we should all start buying aggressively? We hope so, but don't rely entirely on that idea, no matter how good it sounds. After all, the 4-year cycle, if it's still valid, suggests the bottom should come sometime in October. And crypto is a strange creature and often moves against the majority's expectations, so it wouldn't be surprising to see another shake-up before this painful cycle fully ends. Don't get us wrong, we remain optimistic about Bitcoin and the crypto sector in the long term, but stay aware of the risks and be alert for potential downward moves. To wrap up, let's talk about CRO, which plunged to a 3-year low below 5 cents. The reason is that Trump Media officially cancelled 2 major deals with Crypto.com. According to the information, the companies abandoned plans to create a publicly traded structure that would accumulate a massive amount of CRO, as well as a separate partnership related to future ETF products. The first project, Trump Media Group CRO Strategy, was supposed to turn Yorkville Acquisition Corporation into a specialized company holding and expanding CRO reserves. The deal included a huge package, over 1 billion CRO tokens, hundreds of millions in cash, and a credit line for billions more. If completed, it would have created enormous demand for the token, but after changes in business priorities and unfavorable market conditions, all parties decided to walk away. The second cancelled initiative was tied to TruthFi ETF products, which were supposed to be built with Crypto.com's support. After the partnership was terminated, the exchange announced it would not provide services for these funds, further reducing expectations for future institutional involvement around CRO. That's all for today, friends. Wishing everyone a strong start to the week and see you soon.